All right, everybody, welcome to the watch list of July 21st. I think we have a very eventful week coming, and we'll get into what we expect going forward this week. A lot of stuff that happened over the weekend politically, and I know it's going to have an impact on the markets, and I definitely want to talk about all of that. But first, I feel like before we move on to this upcoming week, we should really establish what lessons can we pull from last week. And so that's kind of the first part of this class would just be to talk about some lessons from last week. So I wanted to kind of review like how we could catch some trades like from Thursday. Thursday was a nice day to take lessons from. And everything I'm gonna talk about right here, the screenshots of these trades are on my Instagram. They're also in the Discord. If you're not in my free Discord and you're watching this on YouTube, go to the link in the description right now and join the free community. But if you follow me on Instagram at BagTalkTerrell, then you'll see all these trades. I just posted them today, all the pictures of them. So let's talk about my mindset behind these trades. So basically, when you see the market drop off like this, last week, we were looking at this BTSMC. We wanted NASDAQ to come into this BTSMC. Now we're going to see if we could take this BTSMC to run the all-time highs again. So we came into this daily POI, and things were actually looking pretty solid at first, right? It's a daily. I think I talked about this last watch list, how we had come in here. I think I gave some demonstrations about the price action that occurred in this area. If I'm not mistaken, July 12th. I don't think I'm tweaking. If not, it was my mentorship class. But either way, we came out of a daily POI, such as the purple area. You love to see hourly fair value gaps come out of that and be respected. Just like this, came into one right here, respected it, pushed, and made a new high. Things were great. Now, what I say about real bullish sentiment, though, it's attention to the details. Real bullish sentiment is not just creating it and using it. That's a great sign in itself, but you would want to see price make yet another one. Then you should be really, really convinced. So we kind of stagger our way out of this initial reaction, and then we run these highs and immediately come back into the range. When I'm seeing this, I'm like, oh my gosh, this is not a good sign. But I can't get overly bearish until we really pretty much lose this same area. I mean, look what happened when we lost the area. I think is self-explanatory, right? So this area, everything about what will happen in NASDAQ is dependent on this fair value gap. We were using it, it was fighting with it, but ultimately it ended up losing the battle. And so even these three lows right here that it tapped in, this is what we call an engineering of liquidity. An engineering of liquidity is when they pretty much sell something as a support level. So people who trade support and resistance might have seen, just this overall area, or if they trade supply and demand, which I don't trade supply and demand, by the way. If they trade supply and demand, they see this as a demand zone. Like, look, NASDAQ bounced on this area 3 times. This is a strong demand zone. We should take this to new highs. It's like, nah, I don't see this that. They're engineering liquidity right here, which means they're selling everybody think, yo, put your stop losses in this general area because price refuses to leave that. So they make one more move up, and then when they run liquidity, as I always say, they run it aggressively. So when you run liquidity, you run it aggressively for real, just like this. And I think this is the definition of, I think make sure y'all mics, y'all just like make sure y'all mics. Let's see. Okay, cool. Yeah, so when you what was I gonna say? This is the definition of like an aggressive run on liquidity right there. Right? So now we ran down. Now we getting a retracement. We're getting a retracement at this point. And it's like, okay, should I believe in this retracement? Like, is this a reversal? How do you know? How do you know if this is a reversal or not? Well, let's go to the daily for just a second. Before I talk about all these yellow lines, because I can't wait to get them off my chart. I never chart. I said this before the recording started, I believe, but I never have this on my chart intraday. This is literally for this demonstration, just as a warning. So I can't wait to delete these things. But anyways, so when you look at this big red candle from Wednesday, where's price going? The daily chart pretty much tells you, it's almost guaranteed to tell you we're going for this swing low right here. And I told you that too. Back when we were looking at this purple area as something that could take us back to all-time highs, it tried its best, obviously, but it didn't get there. I said if we do lose this purple area, then at that point I just have NASDAQ coming to these lows. So it's really an if-then statement. It's like, if we use this purple area, all-time highs. If we don't use this purple area, we're gonna run the swing low. That's it. And so remember, the daily at this point, because we lost the purple area, the daily already told us, yo, any rally that comes into the market is gonna get shorted because price is gonna move in respect to that higher time frame. So all them lower time frame pops is just to tap into a bearish PD array or a bearish tool you have in price action, whatever you use to take price back to the downside. Any rally is just to tap into that thing, and you're gonna go right back down. And so let's look at that. For example, obviously we dropped off. We lost the purple area. And I can delete that now. We dropped off. We lost the purple area. Okay, so now this little rally happens. Let's go to the hourly time frame for that. And you're like, all right, should I believe in this? I mean, look, price even reacted to a bullish fair value gap. Ain't this nice? You probably could potentially believe in this and say, hey, price reacted to a bullish fair value gap and it's making a move higher. What did I say about real bullish sentiment though? We tapped into it. When we reacted off of it, did we make another bullish fair value gap? No, we chopped out of it. Suspect. But what did we tap into? What did we tap into? We tapped into the 4-hour bearish fair value gap. And so this is everybody's issue. They're like, yo, but Rel, like, there's 3 bearish fair value gaps in a row. How many people saw this heading into Thursday's price action? Yeah, I saw it. You got the blue one I highlighted. You got this one right here, and then you got yet another bearish fair value gap. And you're wondering, like, okay, I do believe we may be bearish in the market, but how do I know which one price is going to go to? And once again, I don't say things in hindsight, and I want you to question mentors that you may tap into, not to throw shade, but really just for your betterment on, like, if they're only showing you things in hindsight, then maybe like just say look into that a little bit. You know, people are that doesn't mean they're not a great trader, but as far as your education goes, it'll be best to see if they can kind of determine where the market will go beforehand, if we're talking about especially smart money mentors. All right, so I told my mentees that I'm looking at this city, this bearish fair value gap, not the one above it and not the one above it. I told them, and this is all on the recording, I said it's a little tough because, you know, price could come in here, but there's a reason why I chose this one as the one that I'm expecting to take us to the daily lows. And the reason why, which I'm about to say right now, there's 2 reasons. One, when you're really close to liquidity, you should be looking at the closest tools to you, the closest PD arrays to you when you're close to that liquidity target. So I don't think price wants to make a deep retracement just to come back down here. The daily already told me we're coming down here, right? So therefore, we're close to the daily liquidity that we want to target. And so this little retracement, I'm expecting to get shorted at this nearest 4-hour bearish value gap. I don't think it needs to trade past this one to tap into the middle one, or trade past both of them to tap into the third one. Why would it need to do that? Why would it have to come all the way back up here? That's one thing. Now, the other reason why I said that, why I chose this one, is on the daily chart. On the daily chart right here. And once again, apologies for the busyness. I can't wait to erase it myself of this chart. But if you look at this candle here on Thursday, you have to kind of think ahead of time. If price were to open up and trade all the way up here to the fair value gaps that existed in this area and then come back down, that would eliminate the opportunity to create a bearish fair value gap in this area. So we can't even have price do all of that because it's going to eliminate the opportunity for a daily bearish fair value gap. I hope you follow me. I know I might be losing certain people, but I hope most people follow me. And I don't say that in a bad way. I just know there's different experience levels in the room, and I'm trying to talk to everybody at the same time. But so all I'm trying to say is I'm looking for price to make a bearish fair value gap on a daily. So any retracement I'm expecting to be small on Thursday. It should be a small retracement. That way, after the fact, I could do this. Look what I'm about to do. Wow, look at that. That's a whole daily bearish fair value gap. Why do I want to see daily bearish fair value gap? Because that shows real bearish intent. Fair value gaps show real bearish intent. So seeing that is desired if you have a bearish target, such as these swing lows down here, which I had because the daily chart already told me that. As I told you guys many moons ago, I said if we don't use this BTSMC, I would think Nasdaq would come to the lows. If we do, Nasdaq's going to all-time highs. Once we didn't use it for real, we're going to the lows. All right, daily direction, bet. What does bearishness look like? Bearishness would look like a fair value gap forming in this area if we have a lower target. Copy. So that's one reason why I chose this 4-hour SIBI as something that could take us back to the downside. Cool. So now price trades in here. We talked about 4-hour POIs. What time frame do you confirm 4-hour POIs with? Well, we looked at the 15-minute for that. And so as price comes into this 15-minute, bearish fair value gap. My fault. I'm stumbling on my whole words. If price comes into this 4-hour bearish fair value gap, which is the big blue area, the thing that says 4-hour SIBI, that's what price came into. Not this. That's what price came into. On the 15-minute chart, I'm looking for 15-minute confirmation. Now, what is 15-minute confirmation? That will be the 15-minute chart making bearish fair value gaps that not just form, but also get respected. And so this happened overnight. This is the London session. This is kind of convincing. So if a person were to take a trade on this fair value gap, I wouldn't be mad. Now, personally though, I would not have liked to seen it come into this top one. So let's say I was trading London this day, which I was not. I wouldn't be mad at them using the first one. And I won't get into detail about why I say this, but coming into here, the second one was already a bad sign. Like the fact that it came up this high already could tell you like, yo, the move is not ready yet. It shouldn't have done that. Now that's for one. So seeing this chop period that happened in the London session is not really surprising to me based on how that delivered. Now, either way, price is still holding the area it needs to hold if we're going to drop off. So you're still in the clear. Your play is just not ready yet, and you need to wait for that to form. So look at this big red candle. What time did this big red candle come into the market? If you look at the bottom of my screen, it says 9:30. What's the opening? I mean, what is 9:30? That's the opening of the New York session. Time and price. Time and price is so major. Like, you could have a great setup, such as price should use this blue area to make the big drop off. You can have a great setup, but if time is not in alignment, it's not going to move. These algorithms are driven by time. There's a whole time element to when a move is supposed to happen. You see it visually, but when is it going to happen? So boom, 9:30 comes. This red candle comes to the market. Copy it. Look at this. Look at this. This yellow line down here. You see. There's a low right here. There's a low right there, and there's a third low that formed. Then I just talked to you about engineering liquidity. That's how they engineer liquidity. They're baiting people to think this is a support level so that they can go and destroy those people in one shot. Copy. So when I seen this come into the market, for me, I'm like, okay, when we rallied up, I'm looking to short this rally. So I'm really eyeing this 15-minute SIBI. So the first thing to look at heading into this first play is this 15-minute SIBI. First thing you want to look at, because this is trustworthy, because the daily already told me we're supposed to be bearish. So automatically, I'm only looking at bearish things in price action. I don't care about nothing bullish. I don't care if you feel like you see a bullish order block somewhere or a bullish fair value gap somewhere. People probably looked at this bullish fair value gap and was like, look, price is holding this. I don't care nothing about that because I know it's going to get traded back through. So I'm literally only focused on bearish things in price action, such as this 15-minute SIBI. So what do I want to see out of this? Price should ideally respect the 50% of that SIBI, meaning price should hold under 50% of this, especially bodies, not really wicks. Bodies should hold under 50% of this if we're going to make a move lower. Copy. So 15-minute context, I like the 1 minute as confirmation. For a 15-minute POI, meaning point of interest. Point of interest is just the area. I got to remember, there's different people in here. I got to explain things sometimes. A point of interest, in other words, a POI, means that it's an area where you're expecting price to make a move in the opposite direction. So let's notice that this big blue area is a POI. So you see how price traded up into it. And then what happened in this big blue area? It went back to the opposite direction and it dropped off. And so that's why this is a POI. It was a point that I was interested in. It's an area that I'm interested in to see reversals. So if I have a 15-minute point of interest, the 1 minute, notice that it trades up into it. The first sign that showed me that I like this 15-minute POI is the fact that the 1 minute traded up into it so choppily, so nasty. Like, look at this wicky, nasty move. When you see that, when you see wicky, nasty moves come into your POI, that's a good sign that it might use your POI. Price consolidates, and then it makes a move to the opposite direction. Now look how once we made this drop off, we came to the lowest body. First of all, y'all know I talk about lowest body a lot. Look at that lowest body target. So if you play this 1 minute play, look at your safe target before the retracement. Anywho, that's the lowest body of the swing point. We target that a lot. Price retraces. Now, is this a coincidence? This 1 minute bearish fair value gap, is this a coincidence? Do y'all see that as a coincidence? Like, no, can't be a coincidence every time. Like, yeah, no. These markets are not driven by buying and selling pressure. It's all coding. It's all coding, algorithmically driven. Anywho, we react to this 1 minute bearish fair value gap and we start to drop off. I typically look at the 15-second as something to enter plays on. And so here on the 15-second, I got in my play. I didn't enter right away, right? I could have maybe gotten in here, but I want to just see price develop a little bit. It was already moving kind of nasty as I showed y'all. It was wicky and stuff. So I was like, let me make sure we're really about to trend. And so this is what helped me, or why I got into play. And once again, these screenshots are on my Instagram. So, and this was the entry I had on Instagram right here. That 2061.75. I got in seeing the 15-second come into a bearish fair value gap, and it starts to use it. This red candle comes in. I'm like, okay, I believe in it. I already know we're going lower. So at this point, this is the easiest target for me. But obviously, I'm really focused on my daily objective. And so that's why I was able to take this play all the way down here. Like, obviously, I got in where it says first entry. I caught this entire move all the way down in the hair, and then actually down in the hair, and I sold at 49.15. Where is that? Yep, I sold in this candle right here. So why did I sell? So first and foremost, this retracement is not believable because we had not met any objectives yet. And let me explain what I mean by like met any objectives yet. So it's probably best that I do this. So let me go to the hourly. All right, so you see this low right here? Look to the left of the chart. So the right side of my chart is what we were just looking at. The left side of my chart, do you see this swing low right here? This is a form of liquidity. That's a swing point. So I know that this down move out of this 4-hour SIBI, we're going to target some type of liquidity. So being that there's liquidity there, that's the first time that price has a reason to start moving back to the upside, because price is not typically going to retrace unless it accomplishes something for real. And so on this 4-hour time frame, or on this hourly time frame, right now, this move down, it officially has a reason to retrace because it just ran these lows from the left side. It just ran those lows from the left side. All right, so now that's why you see after it accomplished that, I deleted the yellow line, but after it accomplished that, I'm now watching this 1 minute SIBI, because this 1 minute SIBI will tell me, are we still bearish or not for the short term? Price comes into it, it's looking good. And then what happened? Price came back down. You see the lowest body here on the 15-second? Look at that, lowest body on the 15-second. I got out the play after we came back above these highs, because there's no reason to come back above those highs if you're truly bearish. So once we came back above those and closed above it like that, I was like, all right, bet. So that's the first good play, first successful play and all of that. Now, go to the 5 minute for a second. So now it's time for price to most likely make a deeper retracement. So let's play this out a little bit. Oh, wow, that moved way faster than I thought. All right, so basically, price comes up into a 5 minute. Oh, and I think I can start deleting some of these. So my chart looks so noisy. Hold up, let's delete some of these now. So did I mention how we reacted at the 50% of this 15-minute SIBI? It was right at 50% of it. So that was a good sign for me, by the way. So anyways, that's going now. That's going now. We don't need this. We don't need that. We don't need this. So a little less noisy, right? Isn't this, it's like a headache, just like, oh, that's so freeing. I cannot stand the noisy chart. All right, so look, here comes the 5 minute time frame. Look at this retracement. We come into a 5 minute bearish fair value gap. So what's the mindset here? Well, this is a very, very probable bearish fair value gap. If we're bearish, we really should hold this fair value gap. Why? Not gonna lie, that's mentorship material. I'm not gonna lie, because the choice of fair value gaps is something that I hold dear to my heart. I ain't gonna lie. So I definitely hold stuff like that to my mentees. But why do I like this? This is a very probable one. Just know that. And then simultaneously, you see this yellow thing. This is a phase 2 concept that I teach, the bias low. I have 2 forms of confluence, and this is what I mean. I try to, phase 1 is about SMC, phase 2 is about the other algorithmic strategy. I use them both because it gives me real precision. Peep how that yellow line that we reacted at is the spot where we should get a rejection if we're truly bearish. And so we're already in a 5-minute bearish fair value gap, and I noticed that price is reacting to an algorithmic level. And once again, that is not support and resistance. Don't even try it. It is not support resistance. So that's an algorithmic level. So that's just like double confirmation for me. I like this. So one thing I want to see is the 1 minute give me confirmation. 5-minute POI. I could use either the 1 minute or the 30-second, preferably the 30-second though. So for your notes, if you have a 5-minute POI, you should get confirmation on the 30-second, ideally. But either way, the 1 minute comes down, reacts to a 1 minute CIVI, and then it starts to push to the downside. So let's see what that looked like in here. So it starts to drop off. I was a little late on my entry here, but I got in right here. This is where I got in. And I forgot to say, on the other play, on the initial play where I talked about getting in from wherever that was at, I left runners. I left 2 micro runners. And I was holding those micro runners even through this entire retracement. So I sold everything except 2 micros. All my micros, I held those joints all the way till over here somewhere. So this whole retracement, why did I hold my micro runners? No, I wasn't just being reckless. It's just that to me, I got in so high up here in the price action, wherever that was at, that I knew price would come up this high before the end of the day. So I was cool with whatever retracement came into the market because I knew that we was going to come back down to meet more closer to the daily objective. Okay. And so just know I'm technically still in 2 micro runners. And now I'm on a different funded account on this entry here. So anyways, different account, boom, I get in right here. And so this is a pretty easy thing. There's nothing to explain. There's no lessons to take from this drop. It's just holding. I think it's not really too crazy. I think the only thing I could say for people is like, yo, bro, how do you know like when to stop holding? And I want you to just keep in mind objectives. What is the 4-hour objective? What is the daily objective? What is price really truly trading for? Like, what do you think price is reaching for today? Especially after, in simple market structure, I don't even really care about market structure or trade the traditional market structure. But if you wanted to keep it real simple like that, right? If you just simply said lower low, lower high, what comes after a lower high? A lower low, right? And so even getting in at this yellow line, it's pretty easy to say we're about to make a lower low than the previous low. Just the daily really told you we going lower, but even if you want to just simply pay attention to market structure, so getting in right here is like easy to say we're gonna end up dropping off. And I got out here. So now let's talk about exits. What's a way that you can potentially exit a play? So this yellow line, it says SSL. That stands for sell side liquidity. Price trades for liquidity, right? And so as we run liquidity here, it's very important to look at what price does after you run a form of liquidity, such as that yellow line, which comes from either the 4-hour or the daily. But either way, it was a pretty big sell side pull. So now I'm really curious to see like, yo, what comes next? As we invalidated, let me go to the 1 minute for a second. Go to 1 minute for a second. I really want y'all to understand this. Is this where we at? Yep, that's where we at right now. Okay, so notice that as we're running this liquidity, you would like to see a fair value gap nearby. So you see this 1 minute fair value gap. I'm watching this like a hawk. Once price comes over this, I already know, okay, we're about to make a potentially deeper retracement. So that's why I exited this play. Now, we made a little bit of retracement, but then it started coming back down. Cool. No one's perfect, but to be honest, it didn't really go down much further than that. But I'm just giving you my logic on why I exited, because when we run liquidity, those nearby fair value gaps should really be respected. And that's all I'll say to that. Those really should be respected. So as it's not getting respected, I'm like, you know what? I'm not even going to risk all these profits. I just made some pretty good pretty good money right there or whatever. And then there's one more play I'll go over here and see what gems we could take from that third one. And so let me do this. Make it a 5 minute. Make this quicker like this. Okay, that should be good. That should be good. Okay, people. Okay, people. So now, time. Didn't we say time is such a major element in the market? So here's how you can use time. Think about the formation of candles from even the higher time frame, for example. If you ever see an hourly candle, a lot of times hourly candles have wicks on both sides. You'll see a top side wick and you'll see a bottom side wick. And so if we're looking at a bearish candle on the hourly time frame, if it opens up right here, and it's gonna be a red candle, if you were psychic, you could tell the future. If a candle opened up, you could say that it's probably gonna run up higher first before turning into a red candle. And then, to get the bottom wick, it probably closed a little bit higher than it had, than it was at the lowest point of the hour. And so my point in that is, as the 3 o'clock hour comes right now, I'm watching for price to make a quick move up and then drop off, because I didn't think we were done dropping for the day. And so I'm like, all right, it's the last hour of the day. So I really hope y'all follow me. I'm like, yo, it's the last hour of the day, the 3 o'clock hour. So chances are we may run up for a little bit to get the top wick, and then we're gonna drop off and have a bearish candle for 3 o'clock. This is my mindset at the time. Okay, so with that being said, look at this candle right here. You see this says 15.00, which means 3 o'clock. What's the first thing it did? It traded up. Boom, got the top wick. Now I'm watching like a hawk. What comes after that? Well, now that we got the top wick, I'm looking at this 1 minute bullish fair value gap. Will this be respected to go higher? Because if it's not, that's a good sign. Like, oh, we just disrespected a bullish fair value gap. And so I told y'all about confirmation a lot. Confirmation is not just only in the form of the direction you want, respecting fair value gaps in the direction you want. Sometimes confirmation is also disrespecting the opposing side. And so if you were a bullish person, you would want this fair value gap to work. So when it gets invalidated, if you were in buys or if you were in calls, you were actually pretty disappointed because you just took a loss. But guess who's winning? When a bull is losing, that means a bear is winning. And so that's a form of confirmation in itself. So I'm like, okay, invalidation right there. And then simultaneously, we made a bearish fair value gap. It's small, but it was created. So simultaneously, we made one. That right there is a form of confirmation. So I'm like, okay, I like this. And so now you guys may see why I'm looking to get involved. And so as that's happening, and I noticed this drop off, that's when I got involved. Because, and let me even further explain that. Now look at the 15 seconds. So 1 minute is already telling me we probably about to start going down now. It's based off of an hourly concept in which I'm expecting a red hourly candle. Let me slow down. I feel like I'm saying a lot. Let me slow down. I'm expecting a red hourly candle. And so I'm waiting for the fake move up, and then I'm going to take it on the way down. And so before I can take it on the way down, I would like to see bullish PD arrays get disrespected first. And so when I seen the 1 minute bullish fair value get disrespected, I knew it's probably time to get involved in my play. I just need something to take a trade off of. Like, is there a bearish fair value gap that I could get in on? Is there a bearish order block that I could get in on? Is there something related that I could get in on? So why did I get in right here? Once again, screenshots on my Instagram. This was my entry on this third play. Why did I get it right here? For me, this is how I enter sometimes. So first and foremost, as we're coming down here, if we were truly bullish, believe me, this fair value gap on the 15 second would have held if we were truly bullish. Because under that, we have a huge sell side buildup right here. So I know we're about to run this liquidity. And when we run liquidity, we typically run it aggressively. Y'all gonna hear me say that a lot. When we run liquidity, run it aggressively. And so as we're dropping off right here, a big bearish candle comes in pursuit of all of this liquidity. I'm taking my chances. And so if I enter, which I really entered where the yellow line is at, that was my exact entry. If I entered right here, immediately, where's my stop loss? My stop loss is right here. Because for me, I'm literally just looking for price to make a bearish for gap. And so if the very next candle opened up and touched this candle, that means that there is no bearish for gap. Therefore, I have no play. My play idea is dead. Everything I wanted to happen is just dead automatically because I don't even want this play unless there's a bearish gap. It's similar to the mindset I had when I was looking at the daily chart at the beginning of this Zoom. So if y'all rewind the video to when I talked about expectations on the daily and why I used the closest 4-hour fair value gap to me, it's the same logic. It has to do with expectations and seeing like if I want to see a bearish fair value gap, what should happen here? Well, that means that if I get in right now, the next candle should pretty much just like kind of open up and then start to trade down pretty much immediately. Okay. And so just like that. So I get in at the yellow, price opens up, trades down. When we run liquidity, we run it aggressively, right? You see how aggressively we ran that? Yeah, that's what you want to see. And so, you know, I'm in this play, and then you just kind of like, I watch it on the 15, I watch it on the 1. I'm expecting more lows here. Similar thing, like I said about market structure, which I don't even care about market structure. I really don't. I don't care about breaker structure. I don't care about changing character. But if that's a simple way to look at the market, then you could say lower low, lower high, lower low, ain't it? So I'm expecting a breaker structure here, meaning we're about to get a continuation to the downside. And so, yes, that's what happens. So that's why I'm still holding my play at this point. All right, cool. Now, my target was this yellow line. So here's the tough thing. When price gets so close to your target, I'm up a ton of points here, right? Like I'm up a lot, you know, especially because I didn't take it with 1 micro. So, you know, I'm up a ton. So I'm just like, all right, what should come after this? I'm really close to my target and we're getting a retracement. You need to know or really start to find someone like myself, to be honest, which is not too many people, but who really understands fair value gaps at a high level, because it'll help you get out of plays early if it's a losing play, or get out of winning plays early enough to where you don't give all your profits back. And so this yellow line is my target, but I understand that there's no way where we should invalidate this city on the 15-second if we're indeed supposed to run the yellow line. So I already know if we run over this, we're not hitting that yellow line, at least not for the short term. Like, I don't know if price wants to freaking, you know, it could come up here first, then go. All right, but one thing I know is they about to take all my gains back before they hit that target. And so my entire play is based on if we're gonna go bearish off of this fair value gap right now. And specifically, I really wanted to hold the lower 50% of it, but whatever. And so as price comes above and then invalidates it, that's when I got my play right here. That's my exit. All right, that's my exit. So I got in at the yellow line, and that's my exit on that. I'm like, I'm not about to let them take my profits back. And let me show you an example of what I mean. I mean, look what happens after that. Look what happens after that. Good thing I got out. Look, like, good thing I got out that play. Because, bro, y'all see what's up? Y'all see what's up? And that's what I'm saying. Like, you could peak reversals early if you truly understand price action at a high level. And even if you don't use the 15-second, it's honestly the same concept with this 1 minute. This 1 minute fair value gap, same concept. Once price left it, you knew it was up. And so, you know, if you understand them at a high level, you could get out of play super early, not get profits back, et cetera, et cetera, et cetera. But most people, including people on YouTube, including content creators, don't understand fair value gaps at a high level. And so you got to be careful who you tap it into. But we all here for a reason, so we're going to keep learning. But those are gems from last week. And appreciate you, AZ. Appreciate it. Yeah, I definitely wanted to share some things. I feel like there's a lot of gems that we could have gotten. I could really just make that the class itself, but I'm gonna talk about next week and it right now on this part of class. So, you know, if you have questions about this demonstration that I just went over for those 3 plays, save that for after I stop recording on YouTube. Because once again, if you're watching this on YouTube, join the free community so you could be in these Zoom classes and then be able to ask questions and make requests, etc. But right now, I'm gonna just go right into the the watch list. So yep, so we're going to this tab. All right. So that's last week. Let me take a sip of my juice because let's toast to last week. Last week was a pretty solid week of price action. Sip of my, what is this? Cranberry apple. Take a sip of it. Now, let's see. Monday, there is absolutely nothing happening in the market on Monday. Nothing. So we call this the weather report. When we talk about what to expect this week, it's just like when you're listening to the weatherman or the weatherwoman giving you the forecast, and this is the economic forecast. So what I'm saying is Monday is not too much to there's nothing happening in the economic environment, and therefore it's probably not the best day to trade. I'm not saying don't trade, because I'm sure I will myself. But what I'll say is you should have a different mindset as you trade. So basically on days where there's no news events, the mindset I embody is a mindset of someone who's playing really conservatively. I drop my size down. I'm quicker to like look for chop, basically. Like I'm looking really hard for chop. Like, if we were bullish, that would have happened. If we were bearish, that would have happened. How come both people just lost right now? A bear and a bull just took an L. We about to be in chop. Then I'll really sit out for real. Or at least, come back at a later part of the session or something. Like I set different price alerts, but I'm not about to get caught up on days like a Monday where there's no news event. And so I'll just say, be careful, have that mindset. If it trends and it becomes an amazing day, hey, that's cool. If you were in with light size with a big move, it's still gonna be good money. So anywho, Tuesday they got PMI, nothing too crazy. Wednesday is nothing, another not eventful day, but Thursday is GDP. That should be pretty solid. We need this news event right here, and we need Friday for sure. PCE is a major, it's a very big deal for the Federal Reserve, and so we want to definitely make sure that we keep our eye on Thursday and Friday's price action. Those are expected to be the best days this week, but we'll take it one step at a time. So now let's get into the price action. All right, so this target is just, I know I have new people here every week, so I like to show this. Something I've revealed on Instagram one time is the fact that price doesn't always have to go for liquidity at the top of wicks. You could just target the highest body, and this is a perfect example that we all witnessed on DXY. This one watch list some weeks ago, I said we're going to use a certain daily BTSMC, and it's going to take us to the highest body on the weekly chart. Notice that was the literal top to the exact tick. That was the literal top of DXY, and ever since then, we have just basically traded all the way back to the downside. And then we had an initial target, we ran past that, and then the second target was for us to run this yellow line. Cool, we call it before it happens here. That's what we do at BTSMC. We call it before it happens. Everything has played out on DXY. Now what comes next? So there are time periods where you really know what's supposed to happen next when you understand price delivery. And there are certain small time periods where you just kind of need to see more information. And for me on DXY, that's kind of where I sit, because we have just met an objective. Plus, we're really trading in a range, to be honest. But we have met an objective, which was to run out this sell side liquidity. Now, here's the bull case. The bull case is, after running out this sell side liquidity, you would ideally want to see price, you would really ideally want to see price continue to that direction. Like what I say about running liquidity, you tend to run it aggressively, right? So why would you run liquidity and then kind of come right back into this range? That's never ever a good sign if you're bearish for us to do what we're doing right now. So for a bull, you should be kind of happy to see that. On top of that, let's go to the weekly chart. On top of that, we love when you sweep liquidity into a fair value gap, such as this weekly bullish fair value gap that price has been held up on. So see how price has been holding up on this weekly bullish fair value gap. Yeah, we love the fact that we swept, still held that fair value gap. Notice that all the bodies are existing above the 50% of this blue area. All the bodies are existing, they're not even touching the blue area, much less than 50% of it. So these are all good signs for a bullish person to sweep, hold the fair value gap, and move to the upside. These are all good. And when you look at the 4 hour, this looked really good as well. On the 4 hour, we made this nice move up. You invalidated the bearish fair value gap with bullish fair value gaps. And so now what I will be looking for is, I will want to see if price could hold this bullish fair value gap. I know we already tapped into it, so automatically it's lost some credibility because price technically, let me delete this bottom blue one so you don't get confused. Price technically already tapped into this 4-hour bullish fair value gap and made a move higher. And now we're about to most likely return to it. And so, you know, you want to see confirmation always. You want to see, hey, will we tap into this still, use it again? 15-minute giving you bullish fair value, guys. We'll look for that. If not, the one below it is not bad either. I prefer the one above it, but I'll still look at this area too. If it loses both of those, then most likely DXY is going to run out these lows. And if it runs out these lows, it may end up continuing to the downside. And so, you know, DXY is on high watch and these two areas right here. High watch. And if it uses them, then it's going to draw up into this daily bearish fair value gap. So if it uses one of these, it could push back up. This red candle could turn into a green candle on the daily chart. This could flip green somehow later today or later, you know, on Monday. And then if we come into this area, what I'll be watching on this area, honestly, I want to watch the entire area. But I will say it's a very, very bad sign if we get daily bodies to close above the 50% of it. That's a very bad sign if you're a bear. If you're a bear, you want to see daily bodies respect the bottom 50% and then trade back to the downside. But either way, you know, that's kind of the bull and bear case, because if it does close above 50% and in general close above the fair value gap, then I have DXY making a strong move higher to run out these highs and these highs. And so a lot is going to depend on what happens in this general area, but at least you guys know, you know, the game plan, and we'll see how the news events kind of affect price action for later this week. So we'll see what's up, but at least we know the bullish and bearish case. Now let's go to the 2-year. Let's go to the 2-year. So on the 2-year, we've been tracking this pretty strongly. Notice that price we picked all the best fair value guys. Like all of this we talked about before it got there. This one, and then here we have yet another one. So price has held all of our fair value guys exactly how it should. And this type of profile where price keeps making deep retracements, that's not the best type of like market profile to be a part of all the time, because eventually price ends up sometimes making a big dump. And so I'm watching for that. I'm not saying the 2-year is going to do that, but imagine it definitely is very possible. That's all I say. It's extremely possible. But we're taking it definitely one step at a time. And so last week's game plan, as you see, this red candle is a Monday candle. We wanted to see when we did our watch list, and price could use this, take us higher. Price absolutely did do that. It used this. I don't know if this was last week, but one of our watch lists. Anyways, it definitely did that, and it ran higher. No, last week was this game plan. This is last week. I remember that. Last week was this 4-hour fair value gap. We wanted to see this take us higher. It did at first. But what is true bullish sentiment? Y'all should be completing my sentences these days. We not just using it, but making another one after it. On the 4-hour, did we make another bullish fair value gap after tapping into this? No, we chopped. What happens after that? We invalidated. Cool. Now price opens up here today and is now trading back to the downside. And so now I'm really just looking at price coming into this daily fair value gap. I believe that's what it's targeting. And this daily fair value gap is extremely, extremely, extremely important. Extremely important. I'll tell you that right now. So whatever price does here will let us know everything. So I think it's just simply clear to say, if we use it, we should be able to run these highs next. If we come into this and you start seeing hourly bullish fair values come out of that, most likely we're going to come back and run these highs. If we come into this and the hourly is choppy, or we simply just run under it, then I will be looking for price to definitely come to the swing low right here. Basically the one below it, the daily fair value got below it. But like low key, I do feel like it's gonna like make a deep drop. If it doesn't use this initial one, if it does not use the initial one, it's an if-then statement. If it does not use the initial one, then I believe it's going to make a deeper drop. But I will take it one step at a time. I need to see what the 4-hour looks like. I need to see what the hourly look like for me to kind of make that determination. Right now, our goal is to watch what it does in this purple. Why is this relevant? I keep forgetting I got new people every week. Why is this relevant? Because on the 2-year, typically, if, as you can see, right, when it's red, the NASDAQ is red. Wasn't the NASDAQ red last week? Okay. When it's green, the NASDAQ is typically green. The S&P is also green. And so we look at these as like some indicators. And I should have said for DXY as well, same thing. That typically moves inversely. DXY moves actually inversely with NASDAQ. So if they're bullish, then NASDAQ is probably going to be bearish. So I look at both of those for sentiment. Something else I look at for sentiment is Bitcoin. So Bitcoin right now, I ain't forget this week because I forgot to do this, or I did it for my free community, but I forgot to do this for YouTube last week. I talked about price using this weekly bullish fair value gap for the second time, but this time it used it in the form of a sweep. So it swept out these previous lows, consolidated, pushed higher. That's a very, very good sign to run liquidity, consolidate, and push higher with bullish fair value gaps, especially coming out of a weekly, coming out of a weekly bullish fair value gap. That is a great sign for a bull. That's a great sign. And so now, being that that gives me bullish vibes and bullish sentiment, I'm looking to see how we act bullishly. So look at what Bitcoin has been doing as we move higher. Little baby retracement. I wonder what we tapped into in that retracement. Nothing really. I think it just pretty much consolidated here. So I don't see anything to the left that we tapped into, at least not in this time frame. Let me not even waste time on that. Either way, we pushed back up, and then look how we retraced into a daily bullish fair value. And then now we're moving higher today. I love that because it's showing me real bullish sentiment. Like when you're bullish things work. This is also a bullish order block, by the way, but I won't even get into that. This is also a bullish order block. So we currently use it to make a new high just now. And so, yeah, this looks good. I mean, I like I said, in the free community, I can see this taking us back to all-time highs. So far, so good. Obviously, we got a nice rally out of it, but we'll see what comes next. Bitcoin has been in a crazy range since March, like the end of February, actually. Since the end of February, we've been in this crazy range. So you got to be careful with Bitcoin. I gave these targets in my free community as well. First target for Bitcoin, if we break out. This is an if-then statement once again. If we run all-time highs, then the next place I have Bitcoin going is 95,760. And after that, the second place I would have it going is 122,520. And it's because since way back, back here in April, go back to the recordings, I told y'all, this is the most important fair value gap for Bitcoin. This one, nothing else under it. This is the most important one. So whatever price does with this fair value gap is going to tell us everything we need to know. And so you guys may remember recently there was a daily, was it daily? No, 4 hour. I want to make sure. I think it's 4 hour, but man, whatever it was, right? It was this drop off that we called. I called this whole drop on Bitcoin. It was going to happen. And I said, yo, Bitcoin is showing some really good signs that it might lose our bullish fair value gap. But you can't get bearish until it actually loses it. So I know, like Bitcoin, if you look at it, yes, it used it at first. This was great. It came back to it. Oh, that's such a suspect sign. Why did it do that? Why did it come back? But at the same time, y'all, it never lost the area. And I told y'all, we can't get overly bearish until it loses this area. I literally wrote up a whole downside plan in the free community. I said, if it loses it, then I'm looking for this, that, all of that, right? But guess what? It didn't lose it. Once again, it's an if-then statement. So we still pushing on Bitcoin, and as long as it's bullish, I'm bullish. If it turns back around and it starts doing bearish things, I'll get bearish. But I'm ultimately only bearish if we lose this purple area. It's been consolidating here for months. So that's pretty much the write-up on Bitcoin. It's still looking good, and we're going to keep riding that bullish trend. So that's a little conflicting because it's really strange to me how Bitcoin stays so bullish as NASDAQ has been so bearish. Somebody's telling a lie because they typically move at the same time. If Bitcoin's bullish, NASDAQ is bullish. So it's very weird to me that they're opposite. And so I'm watching certain things closely. You want to keep your eye on everything. And all right, so that's that. I feel like there's one more thing I want to say about this for some reason, but Um, 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 I guess not. I guess not. Well, one thing I can say real quick going forward on Bitcoin is, you notice how we have this big green candle? What do you think my expectations are for this upcoming week if we're going to remain bullish? If we're going to remain bullish for this upcoming week, you will want to see price open up, trade to the downside a little bit, but then ultimately go much higher, because then you could have the opportunity to make a bullish fair value gap on the weekly chart. See? So notice how we came into a bullish fair value gap. True bullish sentiment would be to come out of it with another bullish fair value gap. That is perfect. That would be perfect. That's what you want to see. So if you're a bull on Bitcoin, you're looking to see if we can make a weekly bullish fair value gap. So you don't really want to see Bitcoin make a deep dive this week. That wouldn't be good. I actually set an alert here because I think I told myself if Bitcoin loses 60,689, most likely it's gonna make a dive to the downside. So I have an alert here because I'm gonna be watching it myself. All right. So yeah. All right, cool. Let's move. Oh yeah, I had like 2 forex tickets and I don't move on. I think it's like 2 or 3. So for euro, I think I was saying that, sorry, it's a little blurry because I didn't make this watch list. I think I made this watch list much earlier in the weekend. So here we are on Euro USD. I'm looking at this daily bullish fair value gap as something that maybe price could move to the upside with. If not, then I expect a much deeper drop. So this is going to tell us a lot. So far, we're already kind of open up and moving higher. I don't know if I necessarily believe in this initial move right now. I can kind of see price turning back around and coming into this. And then I'm going to be looking at this daily bullish fair value gap because it's a very important area for me on Euro. A very important area. If it doesn't use this, then you can expect Euro to make a much deeper dive into this price leg. And I would measure this price leg, and I could see Euro going under 50% of that leg if it doesn't use this fair value gap. That's that. Now, we really sniped the heck out of British pound. Like we talked about price using this to make a move into this monthly RB. It came up into there, see it right around the 50% of that POI from the monthly chart. We start trading to the downside. And then I highlighted this. This is the most important fair value gap for British pound. So far, amazing reaction. Look at that. So far, amazing reaction. It's the most important fair value gap for British pound right now. If we lose this fair value gap, then expect a much deeper move into this range, potentially even running these lows, depending on what the candles look like. But if you want to know what the significant areas to look at for British pound are, I really truly believe it's about this. It's about this fair value gap right here. Very important. So far, let's see what the hourly look like. Okay. So the hourly is potentially going to make a hourly bullish fair value gap here. And so we'll watch that. Does price respect this or does it invalidate it? You know, if we were to trade back into it, are we going to respect it and make another one? Or are we going to, like, even if we respect it at first, is it chopping? Because then it might end up coming back down. And so we'll be watching this. We'll definitely be watching the British pound to see what comes next on that. But it's an important area that we just tapped into. New Zealand. Come on, don't lag. New Zealand dollar. New Zealand dollar. What was next here? I think. Oh yeah. So I was looking at this. If I was a bull, right, I'll be extremely annoyed if I was bullish at the fact that we invalidated this bullish fair value gap. This was an extremely important area for New Zealand dollar. But guess what we did last week? We closed way under it. That means that it's now invalid. And so therefore, I'm looking at bearish targets here. There's a chance that this ticker can find its way down, all the way down here to these weekly swing lows. Very, very, very high potential that can happen. So I'm watching that for downside. And last but not least, this ticker has been very nasty and I don't even recommend it. But I just want to show you guys that there's a daily bullish OB that we've been holding here for how long? Since April. Since April, it's been holding. This is not typically how you would want something to deliver. You don't want a order block to be consolidated on like this, but it's something to watch. It's something to watch. And the dollar, as in DXY, will tell you kind of where to move next. But you know, maybe it'll find its way finally to the upside and run to this target up here at 1.39. So we'll see. I'm watching that too. But let's get to NASDAQ, man. Let's get to the NAS. So what's up, man? What's up on this Nas? What's up on the Nasdaq? QQQ, all of that good stuff. And I'm gonna say this once again because I have new people every week. So look, if you're an options trader, which I trade options as well. If you're I trade both. I trade futures and options. For my options trades, I still chart on Nasdaq's chart on the futures. I still chart there because there's so much more information. And so if I feel like the NQ on futures is about to go down, I'm just gonna get puts on QQQ. It's the same thing. They move at the exact same rate. So I literally don't ever really chart on QQQ's chart. Um, Sometimes I use QQQ as confluence for Nasdaq, and I kind of explain what I mean. Actually, I explain what I mean right now. For example, like this is a little strange to me though. On Friday, let me explain this really quick for y'all. So Friday, notice that we ran the swing low. This was the target last week. Target hit. We wanted to run these lows, so we call it before it happens. Here, boom, target hit, beautiful. But I told y'all, I think there's still some more downside that could potentially come because when I looked at QQQ, I'm like, QQQ didn't actually necessarily run these lows yet. Unfortunately, QQQ was so annoying that they came 10 cents from the low, 10 cents from the target that I gave in the community. I'm like, why y'all doing that? 10 cents? But whatever. And so here is the lowest body, by the way. That's why I say it's always the safest target. Look how it came to the lowest body. It's such a safe target because look what it did after that. Look what it did after that. Look at the 5 minute. Right after it hit the lowest body. It's always a safe target. And then the day ended. So if you were waiting for, 473.82, price came back up on you and you're like, dang, I should have just took the conservative target. I'm telling you, I know we all could get greedy and stuff, but if you just want to play it safe, or even if you want to just trimming at the lowest body at a swing point or at the highest body at a swing point is always a safe plan. That's a gem that I just gave for free because I feel like it can help people. But anyways, so yeah, either way, this is what I mean by I use this for confluence with Nasdaq sometimes. I'm like, okay, QQQ technically didn't run these lows, but Nasdaq did. And so maybe like Nasdaq could drop a little bit more as QQQ targets those last 10 cents. And so that's an example of how I might use them as confluence. But anywho, option traders, I still suggest you chart on Nasdaq because you get that overnight price action. All right, so boom, 4 hour. This 4 hour civvy here, that's something I drew before. I see that we traded actually pretty high into it just now. Bodies are still holding it, which is what we want to see. But this is the 4 hour bearish fair value gap. And I'm looking to see what price does in here. We clearly had a pretty bullish reaction thus far. Looking at this hourly definitely gives me vibes that it wants to run these highs. Not gonna lie to you. If this 4 hour civvy gets invalidated, then I have Nasdaq will most likely run this yellow line right here. So it's really kind of like I gotta see what price doing there, but see the 5 minute, yeah, man. It's not looking too good for who would this be for bears at this second. Does that mean I'm bullish? No, I'm talking about super short term right now. So areas I wanted to watch was this bearish fair value gap. If we don't use this, it may make a run a little bit higher. The place I don't want to see invalidated, I don't want to see the 4 hour close above these wicks. If the 4 hour close above these wicks, then there's a chance Nasdaq could really see a much deeper move into the upside. And so first area I'll watch is the 4 hour bodies holding this blue area. But if we get a 4 hour body closure above the blue, then I could expect a run above yellow, and then we'll see how high he wants to go from there. But it's a lot of, like I said, it's a lot of waiting going on at the beginning of the week right now. And if it really were to drop off, let's see where it could go to. So if you're anticipating a drop this week, that means you're anticipating a red candle on the Nasdaq on the weekly chart. And so if you have a red candle, that means at the beginning of the week would probably be a little bit bullish at first, and then it's going to have to reverse and head back to the downside. And so we could be witnessing that right now. This could be the beginning of a top wick to a red weekly candle, and therefore you could draw something like this as this may be a bearish weekly fair value gap. That's one possibility. Now, if Nasdaq trades up so much higher, then maybe we're not making a bearish fair value gap. Why? Because maybe we're actually bullish. Why would we be bullish? Do you not realize that we're still holding this weekly bullish fair value gap. So even though we ran those lows, we could just be sweeping lows to head right back to the upside. And so that's why I said I can see things going both ways. I have a bullish case and a bearish case. It's just one of those weeks. That's important to keep your mind on everything. So just know this overall blue area, yes, I know we swept these lows, but I really would like to see continuation. When we run liquidity, I like to make fair value gaps in that area. So seeing that there's no fair value gap in here on the daily chart is just a little bit suspect to me for a bearish person. And so I'm watching for that. I'm watching for that. And let's go to ES. ES is the thing to me that I'm actually bearish on ES more definitively. Like NASDAQ, I see both sides. ES, I'm like 70% bearish in the short term. So we're gonna see. So for ES here, I really want to see us reject this 4-hour bearish fair value gap that we're in right now. But we'll see. If not, then we'll probably come into this area and I'll still be looking to see if we want to reject it. After this though, I would lose my bearishness. And so notice that I wrote that there's also a daily bearish fair value gap right here. And so if we don't react to this first one, then we have a daily one above. After that, I would lose faith. After that, we running all-time highs and we're getting to the target we had, the second target we had on ES, which is 5,761.50. So if it ain't this daily bearish fair value gap, like if we invalidate that, I got ES definitely coming into that target up there. We came real close. We already been hit the first target. This is the second target we were looking for. It obviously came close to it, but it didn't quite hit it. Cool. It makes a deeper retracement. Maybe it goes for it next. If not, it does what I'm initially saying, which is this movement. I want to see if we could run out that 5,502. All right. And so I got a question in chat that said, talking about blaming it on the news, because that's the saying we say here, by the way. We always say they're going to blame it on the news because we always chart stuff, and the stuff we chart plays all the way out way before any news event ever even hit the market. So it's like maybe price is predetermined. I've proven that too many times. But so what Sam is saying in the chat says, well, Biden just dropped out of the race. Tomorrow there shouldn't be any news. Do you think this might have any impact? And I was saying that at the beginning of the Zoom. I don't remember if I was recording or not, but I was saying that I want to see how the markets react to what Biden did. I'm not exactly sure how the market is taking it. I know that the market was betting on Trump winning though. Like Wall Street has Trump winning right now as far as prediction, but so I don't know if that changed anything because I think Wall Street already had him winning. So it might not have much impact, but we'll see. I'm curious myself. I'm looking at that myself. And so yeah, 4-hour SIBI, we could take that to run these lows. That's my expectation right now. The last place I would ever be bearish at would be right here, and that's it. Other than that, I'm strictly bullish. Boom, that's the plan for ES. Now the Dow has been very, 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 very interesting. Look at the plan that we had on the watch list. What we said, we wanted to use this hourly bullish fair value gap to run all-time highs. And yeah, any ticker requests and stuff, I'm gonna do after I finish recording. So I got you. Any ticker requests, I got you. So that, and I think gold is actually a part of gold is coming in a few tickets. I got you on gold anyways. So we wanted to use this to run all-time highs. Obviously that happened and we super ran all-time highs. But here's the bad thing. Here's what you don't want to see. You don't want to see us shortly after running all-time highs start making fair value gaps in the opposite direction, especially ones that's getting respected or not even traded to. That's just such a terrible sign. Such a terrible sign. And so I'm actually expecting more downside on the Dow Jones the way that it looks. The way that it looks. The only how I would lose bearishness is if we do not make a bearish fair value gap on Monday. I want us to make a bearish fair value gap right here. Then I really am convinced on downside. But if we open up on Monday and we trade really high and there's pretty much no bearish fair value gap, I think the Dow might end up finding its way back to the other side. So I'm very curious to see what Monday looks like. But the Dow has potential for downside. It really does. After this move, it really does. Really does. And so close eye on that. I'm not looking at anything bullish in this price lag at all. But I love the fact that we invalidated this bullish fair value gap right here. I'm talking about for a bear. If I'm a bearish person, I love that. This is gorgeous. If I was bearish, this is gorgeous. You have a bullish fair value gap that did not get respected after running all-time highs. Oh my gosh. That sound like a nice move. That sound like a nice move to the downside. So I'm looking for it. Plus, we engineered so much liquidity here that I would love for price to just take all that liquidity that we engineered. This whole area, it looks juicy. You feel me? And so we'll see. Now, when I say we call it before it happens here, this is what I mean. For new people, that's what I mean. What was last week's plan? Like, people who was on the watch list. We had 2 targets on the Russell. We had target 1, target 2. This is not a coincidence. Notice that I'm not getting this from any type of liquidity target, right? So you might say, oh, anybody could target liquidity. Where do you see liquidity? It's not about that. I'm not getting it from that. It's algorithmic precision. That's all I'm telling you. And so as price comes in, you see price came straight to the target, and that's exactly where it dropped off from. You can't make this up. You can't make this up. This is what I mean. I'm not just picking random targets in the sky. So now price comes, hits our target, makes a retracement, beautiful. Now this daily bullish fair value gap is the important part in price action. This one right here is the most important one for us. After this, you could see a very significant retracement on the Russell. I think it could come into this fair value gap and honestly, most likely even under it. But I would ignore the ones in the middle. If this fair value gap does not work, I would target price coming much lower into this one right here. I would ignore the ones in the middle. So the important one for me right now is the one that we're currently reacting to. So far we're pretty much consolidating on it, and we'll see what happens next. It's an if-then statement. If we lose this, then I expect a much deeper retracement down here. If we use it, then we should be able to run out the previous highs that we made up there. All right, that is the game plan on the Russell. And so as a reminder for confirmation, you guys want to see, like, if you have a daily POI, we have to make bullish fair value gaps on the hourly, or you have to make bearish fair value gaps on the hourly in the opposite direction. All right, so those are 2 things we'll be looking for. If you start seeing bearish fair value gaps come out the hourly time frame over this purple area, you know what's up. You know where we're going. This whole area is probably about to get invalidated. So on the hourly chart, you see this? This is a liquidity buildup. This whole area probably gonna get ran out. So if we lose the purple, you might see a pretty fast move, at least down there. It should be quick. It shouldn't even be a staggered move. It should be a quick move. All right. And so we'll be watching for that on the Russ. We almost done. So here is copper. I'm watching for price to use the lower half of this daily bearish fair value gap to move lower, because when I look at the higher time frame on copper, look at this. I said ran all-time highs with B adjust off. So on TradingView, you can toggle on and off B adjust. So look at this. Look at this candle over here. I want y'all to stare at the candle over there. When B adjust is on, we pretty much made just about equal highs. When B adjust is off, we actually ran the all-time highs already. So I just want you to be careful with that when you're charting. So when B adjust is off, I love the fact that we ran all-time highs like this, and then we're trading back down hard like that. That's a good sign for some significant downside. And so I do expect it on copper. I do think that if copper was bullish, this was its chance right here. This area was the chance for copper to bounce. This is the most important area. This VI should have sent copper back to the upside if we were bullish. So seeing that copper's weekly candle closed under that area, that was the last bullish sentiment for me personally. And so I believe that copper is going to make a pretty nice dive to the downside. And like I said, the only how I would lose bearish sentiment, I think, is if we don't use this, if we invalidate that bearish fair value gap on the daily chart. So obviously, if we don't use it, that's even better. But the other delivery would be to use it. All right, after that's the only 2 things I would like to see. That's it. Use it or just keep dropping. If we invalidate it, I'm no longer bearish. All right, so that's the important area for copper to look at. And CL, man, gotta love CL. CL is funny. CL is real funny. So CL came into this. Let me turn back on Be Adjust. So Be Adjust is now back on my screen, and hopefully you notice how the candles just changed. So CL came into this weekly bullish fair value gap. This is also a very important area for CL. So this is what you want to look at. Look what it's facing up against. You got a weekly bullish fair value gap, something that could take you higher, but you got a bearish fair value gap right here from the 4-hour chart, something that could take you lower. And so very crucial area. If you see CL react sensitively to this, meaning hold below the 50% of the blue area, if it holds below 50% of the blue and makes fair value gaps back to the downside, CL should be able to invalidate this whole weekly area, in my opinion, and it's going to make a much lower move. And so for me, you know, like if we invalidate this purple area, then I would take CL to the lowest body on the weekly chart. Lowest body on the weekly chart right here as a safe target. So everything for me on CL as it stands right now is dependent on this purple area as well as this blue area. If it uses it, I mean, it's self-explanatory to see that it's going to run these highs next if it uses it, which I wouldn't be surprised if it uses it, by the way. And so I'm gonna wait for confirmation on that. So once again, this week is kind of a lot of things that's kind of at a very crucial point, a critical point, and we need more confirmation. So let's see what gold is looking like. So for gold, this 4-hour BTSMC on gold is very, very, very important. Very important for gold. Last week's plan on gold was this. We wanted to use this same BTSMC to run all-time highs. Do you see how it played out? Do you see that we not just picking random fair value gaps out the blue? We know which ones is important for real. So yeah, we used this one. You see how price moved, and what was the plan? To run all-time highs. Cool. Now, after you run all-time highs, what lesson can we take? The fair value gap right here is the important one. Price does a smart money trap, trades back to the downside. Back to the downside. This is good. Look at these bearish fair value gaps. Not even getting traded back to. That's lovely. Cool. So what's next for gold? Gold really needs to use this bearish fair value gap right here. If not, you can see a retracement into this one up here. So if it doesn't use this one that we're currently reacting to, it may find its way into here, and then we want to see what it does in here. But I would say if we're going to be bearish, it needs, I would love to see it react in the one that it's at right now. If not, I will watch this one next personally. But ultimately, like, that's what we're facing. This is an important area, and I'm watching this one right here. Yep, Lady Kells agrees. She's also currently watching that one. Good. I mean, looking at it right now, getting a nice little reaction so far. What is it, from the 4-hour? So yeah, we'll see. I like this run on liquidity first. Now we get this big bearish candle. We'll see how this ends up going here for gold. Please don't like FOMO into anything or nothing like that. Wait for confirmation. You have no confirmation right now. This is a 4-hour blue area. Therefore, you want to see the 15-minute confirmed from you. So this is a 15-minute bullish fair value gap that I just highlighted. See, there's a 15-minute one. Let the 15-minute invalidate that, and simultaneously let the 15-minute give you a bearish fair value gap. Then you could trust that we're most likely going to run those lows that we just created. Then we're going to end up running these lows most likely. So you got so much room for the play, and if we run those lows, we're probably going to run the whole area. And so you have so much room to the downside to where there's no need to catch the tippy top all the time. You can let price confirm for you. And to be honest, I don't like trading at these hours anyways, like trading Asia session. So I would just be careful. But those are things we'll be looking for on gold. If it completely trades to the upside out of this blue area, like I said, the next place I'm looking is up there. Let me just check the daily for a second. Yeah. All right. So very important area for gold right there. I don't think there's much I want to say about silver and anything like that. Oh, I guess I wanted to say this weekly bullish order block is what price is being held up on, but that's not a good sign. But it is technically being held up on this weekly bullish order block. And so this is just not a trading area for me. I would stay away from silver until it really gets some confirmation on what it wants to do. Platinum, same vibe, not really the cleanest PA. I'll watch this fair value gap and see if this fair value gap on platinum could take us back lower, because this is the important one. If we're supposed to move lower on platinum, we should use this bearish one to take us back below these previous lows. All right, so just in the super short term, we'll see if this wants to take us back below those previous lows. And SPY and QQQ real quick. So when I look at SPY's chart, options traders, what was last week's plan? Last week's plan was for price to come into this bullish fair value gap. That was literally last week's plan. Let's come into this bullish fair value gap and then see what comes next. Price came here. It initially popped up. Let's look at that. It came there and yeah, it initially popped up. That's this green candle right here. And then it traded right back down. And then we had the nerve to invalidate it. It's an if-then statement. If we're bullish, we'll use it to take us back to the highs. If we're bearish, we won't use it. And then I will be targeting the yellow line. So when I look at the fact that to me, SPY has more downside, it lets me feel like, okay, NASDAQ and ES may still have more downside, but there's just, we got to see. But I do feel like SPY has more downside. So, you know, just looking at it, because like I said, I would be very surprised to see price use this fair value gap to take us higher versus the one that we just invalidated. And how do you invalidate a fair value gap? For those that don't know, you invalidate it by getting a body to close under it. I guess I could technically connect that. Hold up. Yeah, we invalidated it ever so slightly, but we did. We invalidated it. And so, yeah, that's invalidation. When you get a body to close under a fair value gap, that's called invalidation of it. And so I would be very surprised if we use the one below. This one, to me, is not as probable. So therefore, seeing us invalidate that makes me feel that SPY has more downside, as in it's going to run the swing low here at 542.42. And so if it's going to be moving lower, most likely QQQ should move lower. So what exists on QQQ under those lows we were talking about earlier? And Frank said the weekly looks bearish too. Bet. So that's even better. Frank said the weekly looks bearish on SPY as well. I forgot right now. I made a watch list earlier. Yeah, the weekly invalidated this and invalidated the nearest fair value gap. That means there may be somewhat of a deeper retracement coming, typically into this area at least, which is coincides with what I was saying. I expect us to run the yellow line. And when I look at QQQ, same vibe. Remember we were 10 cents away from the target last week? 10 cents. They're so annoying for that. 10 cents. But hopefully this week we can actually run it. We have an hourly gap in here, so you want to look for that. If price could fill out this hourly gap here on the Qs, and then we'll reassess. I wrote next destination for QQQ, because if we do fill out this hourly gap, then most likely it should be coming to 459.76. 459.76. And then the last thing I'll show is Apple, just to show you guys once again that these targets ain't picked from nowhere. Back when Apple was down here, I said you guys Apple's coming to 235.15. We called a $30 move on Apple, which is not a little deal. And I didn't pick that target for no reason. Let me reiterate that this is all-time highs. How would I know that price would stop hit right here and not just guessing? For people who think that's just at all-time highs, Rel is just saying a random number. No, I'm not. It's not random numbers. So price came right here, and luck. Why you think we're getting a retracement right now off of Apple? Right after we hit our target, we took profits. We took profits right there. Why? Because look, this is expected. So what comes next for Apple? We'll have to see. Are we going to respect this this hourly bearish fair value gap? We're consolidating on it, but are we going to respect it? We'll see. But I just wanted to really not even talk about what's coming next for Apple more than it is to show you guys, like, this is also a good reason to show you why you should take profits at your targets. Don't be greedy, because you might give back how many dollars? $14 worth of gains. You're about to give back because you were being greedy. $14 worth of gains on Apple. Like, come on, what we doing? And so yeah, we'll see what comes. We'll see what comes next on Apple and everybody. But they'll obviously most likely follow the NASDAQ and the S&P. So I expecting more downside on NASDAQ and S&P a little bit. Makes me feel Apple also has more downside. And honestly, just looking at it, I could kind of tell Apple most likely has more downside. And so, you know, that's really all I had. I said a lot today, so I definitely want to end the recording right here at least. And so if you're watching this on YouTube, click the link in the description for the free community so you could be on Zoom, ask questions after the recording. You know, you could put out taker requests after the recording. You can ask me questions during the recording, and that's the best part about me and the actual free community. Plus, every day I'm putting out updates on what I think is going to happen next. So if something I said from Sunday is not playing out by Tuesday, I could make a quick adjustment and boom, we make money from Tuesday to Friday. And so that's the benefit right there. So make sure you join in that, and follow me on Instagram. The link is in the description as well. There's a lot of value. I got a lot of videos coming in the upcoming weeks. So with that being said, that's all she wrote. Subscribe to the channel.